CNBC TV18 and India Bonds present Bond Street.
Hello and welcome to Bond Street. Joining us on the show today is Ashish Shanker, who's MD and CEO at Motilal Oswal Private Wealth. Ashish, hi, thank you so much for joining in. Most of the viewers know Motilal Oswal as a broking and a capital market company. But how would you describe when it comes to Motilal Oswal's private wealth? What does that do and what kind of clientele do you have for that?
Yeah, hi Manisha. First of all, it's a pleasure to be on your show. So as you know, Motilal Oswal is a 40-year-old institution. I mean, we'll complete 40 next year. It started out as a broking firm, but given our founder's passion for investing in equities, the transition into asset management was a very natural transition. Okay. And over the years, we have gone into adjacencies within the capital markets and investing space. So the journey into private wealth was again very, very natural as our clients started demanding more and more solutions. So it's been a journey of getting more wallet share into the capital market solutions amongst wealthy clients. And now, of course, within private wealth, other than allocation of capital investing across asset classes, we also provide solutions which are, more around succession planning. And of course, now there is a lot of interest around offshore allocations, which we can discuss later in the show.
I was reading through and you joined Motilal Oswal way back in 2012. You built up to be a CEO in 2020. What is the journey like and how would you look at institutional investment when we look at that?
Yes. So as I mentioned, the journey of Motilal Oswal in a sense is the journey of capital markets in India. I mean, as the capital markets have evolved, so has the institution. And there are three numbers which are etched in my memory. When I joined Motilal Oswal in 2012, our total assets under management in private wealth, because it was a carve out from the broking business, was 1,000 crores. The total assets under management in our asset management business, which is now fairly large, was 1,000 crores. And our market capitalization was 1,000 crores. So these three numbers are etched in my memory. Of course, the asset management now manages about 2 lakh crores of assets. The private wealth also manages 2 lakh crores of assets. And we are now a 50-60,000 crore market cap company. So the journey of private wealth within Motilal Oswal again has been a very, very organic journey. What started off as an equity wealth manager, we were known for equities. So clearly clients would work with us for their equity allocations. Has now evolved into a multi-asset platform and solutioning kind of if I may say, approach to wealthy clients. So so we've been adding capabilities, in a very phased and gradual manner. And to add those capabilities, obviously, we've attracted a lot of talent. So from a kind of a startup within Motilal Oswal, private wealth, I can safely say, has become really the core of Motilal Oswal, because any client who wants a solution, we normally are the first point of contact. And then within the firm, we try and figure out what solution works best for the client, because we deal with entrepreneurs, we deal with CXOs, and for sometimes they don't just come to us to allocate capital. Sometimes they would come to us to raise capital. So then we work with our investment banking or our private equity division to help them raise capital. Similarly, there are a lot of clients who want broking solutions. So then we would work with the family office division within our broking business. So we've built capabilities along the way.
Sure. And
that has allowed us to work with larger and larger clients and become a bigger share of the client's capital as well as solutioning.
I'm assuming it works both ways. As the company has grown, so has India's wealth investor also changed significantly, whether it has been about HNIs or ultra HNIs for that matter.
That's right.
How have you seen that change come in, and how has their appetite for fixed income and bonds evolved?
So to answer your first question, I mean, when I started here at Motilal Oswal in 2012, there were 200,000 millionaires in the country. And our goal when we were building the private wealth business was to work with millionaire clients and help them invest their capital and provide other solutions. today we have more than 1 million millionaires.
Okay.
So the number itself has grown 4 times, but the wealth has grown almost 10 times. In fact, even the number of billionaires or ultra HNI clients were much smaller when I started the journey at Motilal Oswal Private Wealth. Today that number is much larger, and the wealth has also gone up multifold. Of course, this has been a function of markets. I mean, as market caps for many promoters has increased, and we've also seen a lot of participation from professionals in the wealth creation journey. As private equity as an asset class has evolved, a lot of professionals have gone to set up companies, and they've got skin in the game. And a lot of that unlocking is actually happening over the last 3 to 4 years. And as that unlock happens, people look to create their own portfolios or family offices. I mean, there used to be a time, maybe 10 years back, where you could actually count the number of large family offices in India. I mean, you had about 200, 250. Today, there are at least 2,000 large family offices in India. So the sheer capital base has become extremely large, and that actually, leads into your second question. As the size of capital has grown, the complexity of solutioning required to address that capital has also grown. So from mutual funds, which mutual funds still a large allocation in most portfolios, but you've seen the growth of private credit. You've seen the growth of all alternative asset classes in the last 8-10 years, as alternates require more capital per se at the point of entry. Alternates also require more maturity, more patience, because most of these alternate asset classes, whether it's private equity, whether it's private credit, or for that matter, REITs, etc., need more patient capital, and they need more understanding, because they may not give you values on a daily basis like mutual funds or stocks.
Agree.
So you need to be more patient. So you've seen the birth of the entire alternative asset industry thanks to the growth in affluence and wealth.
Just talking about bonds right now, and historically has been known that this is a place, or this is an asset class which institutions utilize. In India, in your experience, is that changing now?
Yes, definitely it's changing, and again, there have been 2-3 catalysts which have increased the charm of direct fixed income investing. I think first was the change in the tax regime. I mean, if you recollect, earlier even bond funds used to have long-term capital gains. Now pure bond funds are taxed at marginal rates. So actually that puts them at par with direct bonds. So we've begun to see more and more retail participation as an effect of that, because what people have realized is that if they can work with somebody who understands fixed income and has a good flow of fixed income instruments, you can actually get a higher yield, you can match your cash flow with the maturity, so on and so forth. Second, like I said, as the pools of capital and size of capital has increased, leading to more and more family offices or ultra HNI clients, there is also a search for yield. So people are looking for 12, 13, 14% kind of a yield. Basically, then you'll end up in the performing credit or structured credit territory. And as the demand has exploded, you've also seen a lot of companies now willing to raise capital through the private credit route. Because equity, as we all know, from a fundraising point of view, can be quite cyclical. So times like these, I mean, today, you literally have, IPOs have come to a virtual halt in the last few months. So if a corporate or if a promoter needs capital to invest in businesses, then private credit can become a very good solution. Similarly, there are certain situations where the traditional financing route does not solve your liquidity needs. And a classic example is during COVID. During COVID, a lot of businesses had to temporarily shut down, and that took a toll on the balance sheet. Now, to restart the business, traditional form of capital was not available. So a lot of private credit solutions helped businesses restart, and now a lot of them are thriving. So over the years, we have seen once the tax became the same for direct fixed income as well as mutual funds, you've seen a growth in direct issuances.
Sure.
Second, I think generally the advent of more credit ratings, more information flow, more education. Clients have become more and more comfortable with direct fixed income. And then, of course, for large families and ultra HNIs, then the private credit industry, the performing credit industry is actually a place where you're seeing a lot of growth.
And finally, with India's bond market growing so rapidly right now in terms of both volume and retail participation as well, what role do you see of bonds in a well-constructed wealth portfolio, would you say?
See, most clients that we work with, we create something called an investment charter. So there is an asset allocation framework. So let's take an example. If a client is a conservative client and is happy with having 30 to 40% risk assets in the portfolio. When I say risk assets, typically you think of equity or private equity. 50-60% is bonds. Now that bond portfolio then becomes very important, because that's 60% of the portfolio, and 60% of the portfolio is going to determine your outcomes.
Right.
So managing the yield, managing the ratings becomes extremely important from an outcome point of view. So there most private wealth firms have built fixed income desks. So I'll give you an example. In case of Motilal Oswal, we've actually hired a CIO fixed income, and this gentleman used to be a fixed income fund manager with a mutual fund.
Okay.
And he actually now clears and manages more AUM than when he was in a mutual fund.
Okay.
So this basically tells you that over the next few years, as the size of pie increases, the amount of fixed income that private wealth firms will manage or allocate will only grow bigger. So most private wealth firms will need to invest in capabilities around fixed income.
Point taken. So that's a market that clearly is growing a lot. Ashish, thank you so much for coming back to the studio. I appreciate your time.
Thanks, Manisha.
Thank
Pleasure.
you.
CNBC TV18 and India Bonds present Bond Street.
Fixed returns do not constitute guaranteed or assured returns. Investments in corporate debt securities, municipal debt securities, securitized debt instruments are subject to credit risks, market risks and default risks including delay and/or default in payment. Read all the offer-related documents carefully.